Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Thursday, July 15th. Mike Boutros with you on the horn. Aurelian Jay, great to see you guys in the room. It's been an interesting week. Okay, we're falling into this little bit of a lull here, and while the levels look really good, we're essentially range bound. So lots of things to discover today. I am on a bit of a time crunch, so I'm going to try to get through all of these. On the menu: DXY, dollar yen, Kiwi dollar, gold, oil, dollar CAD, euro dollar, sterling dollar, Aussie and Aussie yen. Interesting moves this week. Dollar Swiss, and we'll take a quick look at what the 10-year has continued to do. Absolutely textbook, just ping-ponging between these key levels. As always, any questions or trade setups from you guys, feel free to throw them on the message board at any time. Let's jump right in. So just ahead of time, we do have some inflation reads today. We got Kiwi inflation later tonight, the BOJ interest rate decision later tonight as well. Heading to the close of the week, from an event risk standpoint, we do have core inflation out of the Eurozone tomorrow, and then retail sales. That's going to be interesting for the US. The print for June is expected to show a contraction still of 0.4%. It's after a negative 1.3% the previous month. But we'll be looking to see if that reopening trade has stirred and continues to support the retail sales market. So we'll see how that pans out tomorrow. But for the dollar, here's what it looked like. Here's what it looked like earlier in the week, and here's where we are now. Guys, it's all about this same 92.28, 92.46 level, 236 retracement off the high, 2018 open, slope resistance. We've been talking about it all month long, since last month, essentially. Multiple weekly attempts, multiple weekly strikes. We haven't closed above it once. So the focus this weekend to keep the long bias in the dollar viable would necessitate a close above 92.46 on a weekly close basis. Watch this tomorrow. On the intraday chart or the daily chart, here's what it looked like earlier in the week. We were heading right towards, uptrend resistance here on the 13th. That's still sort of the main play. Here's what DXY looks like on the daily chart. We're still testing that upslope resistance now, okay? Still holding basically the swing highs, the opening range high for the month. You're still governed by 92, 92.85 for the entire monthly opening range for July is still intact, just below slope resistance. Really clean setup, but as we were noting for the last couple of weeks, divergence into the highs, higher high, higher high, higher high, higher high, lower high, lower high, lower high. So the momentum sort of exhaustive trade is there into uptrend resistance. That puts the risk to the upside, right? Or the upside bias is at risk. So here's what the intraday chart looks like. For all intents and purposes, guys, this is just a weekly opening range. So it's the monthly opening range into resistance, but it's also the weekly opening range into resistance. Here's what the intraday chart looks like. No change to any of those levels. I'm going to zoom this out to the 240 just to remind you the pitchfork that we're in. Same exact setup, no change. Here's what it looked like back on the 13th. Okay, we rallied right into that opening range high for the month, slope resistance, failure. Here's the pullback, still holding slope support, right? But again, objectively, the weekly range is sustained right here. So you have US event risk on tap tomorrow. What do you do from here? Look, I hope you guys saw Jamie tweeted out a chart with a wave count on this possible wave count yesterday. And I think he might be right, which would suggest that this is sort of wave 4. We're looking for the concerted wave 5 last extension to the high. If that is the case, again, you're still at uptrend resistance, guys. So while we are still constructive, we are still in the uptrend, I just want to caution you on strikes into this zone could be sort of the pump failure. It could be the exhaustive trade. We've been in a really nice rally. It's ripped. Fun 2, 3, 4, what could be a completion of wave 5. Again, Jamie would have this as a 4 truncated 5 possible. At the end of the day, we're still looking for that top side exhaustion. So risk is still higher, but the focus is still higher, but the advance is at risk here as we struggle into uptrend resistance on building divergence. So we're gonna need a kick, okay, to get the top side pop, to get the breach and run from this level, in my humble opinion. I don't know if the event risk on tap later this week or into the close of the week is enough, but certainly that's the game plan. All things held constant. Again, objectivity is key. 85 pip, not even, less than 85 pip weekly opening range, right below trend resistance. That's number one. Any questions on DXY? All right, so I'm going to take it in order here and just go over last night's update first because we'll hit Euro in a moment, but I do want to cover some of these major things that we were looking at just last night. So dollar yen, really interesting setup. We've been talking about dollar yen specifically on the reversal off of that major uptrend resistance. So, excuse me, a couple of weeks ago, we came right into that zone, 111.60. Failure, turned right back lower. We've been talking about this support at 109.68 the last couple of days. Again here, you're marking divergence into the yearly highs, failure at major inflection. This is all we've got so far. So for the month, essentially the focus is 109.68, 111.60. So it's like a 200 pip range for the monthly opening range. But all things held constant, dollar yen on the daily looks like this. So really nice turn, right? Off of that upslope. Here was the break. Here is what we were looking at last night. Okay, dollar yen posted an outside day reversal yesterday from this pump off of support. Outside day reversal lower, shifted the focus for another drive into 109.67. 109.56 is the 50 of the April advance. Look where we just bottomed. It looks like right ahead of that 109.67, we just touched the slope. This is 25% parallel with a little bit of a bounce here. Could see some more consolidation. Range bound conditions look like they're sort of starting to fall into play here with all these weekly ranges that are kind of just giving back. But for the intraday chart, it looks pretty clean. Okay, didn't quite make it, like I said, into that lower support zone. The low registered right ahead of it. It was 109.71. We were looking for 109.68. But you get the picture. Right, we dropped into the zone, rebound. Still looking for exhaustion ahead of this if we are moving lower. So that's 110.34 into 110.41. That's now your near-term resistance. And a break lower beyond this, you're looking for a pretty extreme shot here. So it's a very nice pivot. So it would be 109.7 into 109.18. Okay, it's the 618 retracement. That's the June range lows, but 100% extension off the high. If this is corrective, takes you into the 2020 yearly open. I love these confluences when they converge on slope, and that suggests basically into early next week. If we do get a break below 109.68, that's sort of your big level right there. So for dollar yen, all things held constant right now, I'm looking for an exhaustion ahead of 110.34, 110.41. If this is going to hold the break of this ascending channel that we made, key support on the downside basically into 109.07. and 108.60s. BOJ on tap tonight. BOJ on tap tonight. So I guess let me just segue real quick into yields, because since we have such a yield sensitive pair here and we went over the dollar, here's what the 10-year is doing, guys. And it's very interesting to see where we're at now because we've been following this one for a while. So our last update on the 10-year was back here. And we had just made a big rebound off of key support, 38.2 retracement. We're also talking about that swing high from March of 2020. That's 127.56, 128.94. It's exactly where this thing faltered on a closed basis. Rebound, we were looking for that rally right back into 141.46, and boy, did we get it. Right into that region, and here's the exhaustive pullback. So again, this is one of those assets where I do think you could see some more consolidation, some more crunch, respect a break of this key range in yields, but start to tone down. Again, anything on the short side for yields here, start to tone it down as we head into that slope. Remember, this is basic slope support extending off the yearly lows. Well, not the yearly lows, but it's going to be the August lows of last year. 1 touch, 2 touch, 3 touch, 4 touch. Just lower at 130. 130.20. So interesting price action. Is the smart money getting out of stocks? Is the smart money bailing on risk? That's an interesting concept. hasn't really materialized yet across the board, but certainly the move in yields that we saw materializing last week, man, certainly puts a damper on the bullish or long risk trade, doesn't it? So anyway, let me segue back here to New Zealand dollar. New Zealand dollar looked very interesting yesterday as well. This was heading right into slope resistance. I added this pitchfork, and I told you guys again, you know, when we add these really short-term pitchforks on the opposite side of the trade, we don't know if there's any merit there, but it continues to highlight key support. So if you get the topside breach, you know where to look. If it breaks that support level, well, it's a break of a near-term uptrend, then you're just looking for that drop. So even if they last a really short-term in duration, they can still be a pretty strong tell. Here's what Kiwi dollar looks like first on the weekly charts. Just wanted to highlight the critical nature of this support into 69.41, 69.69. We've been talking about it for quite some time. 2019 swing high, late 2018 swing high, and more importantly, the objective yearly opening range lows. We've been sitting there for the last 5 weeks. You got the 52-week moving average there as well. Basic trendline support there as well. It's loaded. It's loaded. And this is why if I, you know, again, my humble opinion, guys, if we see a break and a pivot below 69.40, there's really nothing till 67.90. I mean, we could, you know, figure some interior levels here, but that's sort of the risk in my eyes if we break lower. Now, the corrective stance too, if this is the 5 waves up that we interpreted, the corrective stance, 2 equal legs, also converges on 69, 67.95, which are those swing highs from 2019 and 2020 before the inevitable break. So really clean on the weekly charts, right? Resistance 71.10, bearish invalidation 71.69. Here's what it looks like on the daily chart. Really clean. We had this thing right at resistance last night, right at the upper parallel of the descending formation. Perfect touch, perfect pullback. Monthly open support 69.80. The monthly opening range is preserved above key support, above the yearly lows, above all of those technical factors we just talked about on the weekly chart. So this is, you know, it might be frustrating these last couple of days because we're really crunch, but when we do see a break of this range, I do think it will be a pretty decent setup. So we want to make sure we stay here nimble on Kiwi, keep them powder dry. Here's what it looks like on the intraday chart. And again, just a picture perfect hold of that slope resistance last night. Couple attempts, failure, right back into 70.02 right here. 618 of that weekly range is at 69.65. If this reversal is going to hold that support, this is where the losses should terminate. Now, that's not saying that I'm getting bullish here. That's just putting something in the sand for me to kind of work with. This was, as I noted yesterday, objectively a break of the weekly opening range. So we should be looking for a Thursday, Friday high. Well, we made a Thursday high. What does that mean? Is that it? It's too tight to tell, okay? But it seems like a very clear defense of downtrend resistance. So for me, I'm looking for this drawback to see what kind of reaction we get into 69.65. Anything below that, again, I'm actually expecting a downside break at this key support. That being said, if this were to drop into this zone and hold, it actually might be a nice launching point for the stretch towards 71. So we're still assessing, still on the rocks here for Kiwi, whether we're going to make a larger rebound off this key support and kind of go for a corrective move, or whether we're just going to hold this downtrend. For that to really materialize, we need to see that break below 69.33. So unfortunately, more range. Gold, number 5. Here's what the gold trade looks like. Really interesting as well. So gold finally making a move. If you go to the previous gold update we were looking at, guys, we were sitting here in a very tight range. Last week's opening range, this week's opening range, right between 1792 and 1815. We were looking for a break, and I even noted on the 13th, you know, respect that break if you get it, because it's been ranging for days. Last night, we highlighted the break happened. We got a breach of the weekly opening range looking higher. Slope, Secondary level is right into that 1833 level. You got a confluence region there, the 618 extension off the low, and the 50% retracement off the high. Here's what gold looks like now. So we made the stretch into 1833 last night. Here it is. Again, the 618 extension of the advance off the lows, up slope resistance, divergence into that final thrust. Suggests we could get a little bit of a pullback. 1814 support, bullish invalidation for the near-term thrust at this point is 1808. It's the weekly open. All right. Now the big resistance zone, excuse me, aside from here, is actually just a bit higher into 1850, 1859. So you got the 618 retracement of the decline from the yearly highs. Love that. You got the 100% extension from the ascent off the low. Love that. But you also have some channeling here, some slope resistance, and basic trendline resistance off the yearly high. 1 touch, 2 touch, 3 touch, all embedded in this nice little zone here between 1853 and 1859. So what does that mean for right now? Again, my humble opinion, as it stands, heading to the US Open, yeah, I do think that you don't want to start loading up on the longs here for gold. I think the risk is for a little bit of a washout. Ultimately, it's still constructive above 1808, okay? So play accordingly. Also, keep in mind that this was an objective break of the weekly opening range. Shift to the focus for a Thursday, Friday high. We've executed a Thursday high. Again, I don't want to chase the longs. But at this point, if you do get a pullback, look for support at uptrend slope near 1808, 1814. Questions on gold? So the crude trade is similarly coming into some near-term resistance. I don't think it was quite as clean, but the formation that we added this week looks okay. So I just wanted to kind of bring that up. So the focus for crude was the fact that once again, we paid a pretty big reversal candle off of upslope resistance. So the crude trade looked like this back on the 14th. Again, last night, I'll show you this in a moment, but the basic premise here was failure at uptrend resistance. Remember, we talked about that big old outside reversal we made at the highs for the month in July. If this is corrective, we said we still need another low, right? If this is motive and we're looking for correction, I want another low. And that's kind of where my head's been at with crude. So here's what it looks like on the intraday chart now. I know it's not the sexiest chart, guys. Bear with me. Let me just kind of clean it up for you a little bit, focus on that. But here's what it looked like. We had tagged that median line. I was looking lower while below, again, the 25% parallel, the 75% parallel. Didn't really even get much rebounds. It's just been sort of a slow drill lower. Look, at this point, if it does recover, same game plan. Looking for failure, maybe along the weekly opening range lows, maybe along the parallel. But ultimately, we're looking for 70, 80, 69.25, 69.26, big support. Again, objective break of the weekly opening range has us looking for a Thursday, Friday low. Is that it? Remember, on the broader picture, crude is super constructive. It's just that we came into radical resistance. And you can do the fundy stories all you want. We can throw headlines on CNBC and Reuters and Bloomberg all we want, right? But at the end of the day, the trade is the trade is the trade. And we're at big resistance. So we've been trying to play just sort of the pullback from that big resistance. And the focus has been, hey, if this is corrective, we want to see one more low. We want to see drive towards 69.26 if possible here on crude. Just my humble opinion. Questions? Okay, that's number 6, dollar CAD. So the dollar CAD trade, boy, man, this pissed me off yesterday. So just as a disclaimer, I was in a beautiful short from the previous day on this stretch with a tight stop against a high with a limit literally at 124.21. So BOJ started to come out. I got caught up in an IG call talking with someone on Daily FX, and we literally turned 1 or 2 pips ahead of my limit, ripped off. So I actually got stopped at break even on the rest of this one. No harm, no foul, but it was really frustrating. We had a 60 pip rally or a 60 pip gain on that we just didn't book. But anyway, long story short, here's the recovery and the rebound. For dollar CAD, it's one of those trades where, again, I love the long side, but we came into big resistance, and that big resistance still is sort of the ceiling. 125.79, 126.35. We've been talking about that region for a while. It's exactly where we petered out last week. Here's the pullback. Not much of a correction before trying to launch again. So look, dollar CAD on the daily chart looks like this. There's not really much fun to be had here per se, but it's the same exact levels. Nothing changes. So literally, even if we do rally again, you're at risk into 25.80, 26.03. And I just wanted to see a deeper setback here to try to get a better long position. But at the end of the day, we're in the uptrend. That's key resistance. Need a close above 26.06 to get the resumption pattern. We're looking for 26.50. We're looking for 27.13. Monthly open support hasn't changed. That's still 23.95. Bullish invalidation for the broader trade, still 23.65. So could get some more chop sideways action here. But keep in mind, again, I don't like to strip the corollary and kind of glue that, but if crude prices do come off, that association seems like it's actually been doing all right to help fuel CAD weakness, further dollar CAD higher. Now, the BOC obviously came out and did its thing. Obviously, most of the move you saw yesterday here was really more so, well, I guess the previous drop that we saw earlier in the day in the dollar was really because of that inflation number. I mean, inflation is running hot. And every time we get one of these central, and Powell specifically, oh, it's transitory. Now they're starting to soften that transitory tone. If inflation runs too hot beyond expectations, we're ready to act and all that. Well, in the meantime, the Congress is set to spend another $3 trillion. If that's not inflationary, I don't know what the hell is. So it's very interesting to see this dynamic start to play where you're getting the push and pull from both the fiscal and the monetary side. I digress. For dollar CAD, the whole focus is, again, what kind of reaction we get if and when we get into that 25, 79, 26 region, still key resistance. Questions on Loonie. It's number 7. All right, now we go into Euro, number 8. Here's where Euro kind of freaked me out, or I guess faked me out. Didn't take any positioning on it, but I've been looking for, some sort of possible breakout for the Euro move. Here's what it looked like back on the 12th. We were trading into downtrend resistance. I added this ascending possible formation sort of as guidance for if we do break out. That's sort of where we would look for the timing of that move. Here's what it looks like now. We got a test, and then look what just happened. False break, recovery back lower. Does that mean we look for resumption? Watch for a reaction 1802 here today. It's the 618 of the advance off the low. If we do break below this lower parallel, yeah, I do think it's resumption. It's classic false break. In fact, the rally, even when it false braked, couldn't even go for a test of the weekly open. It turned ahead of that. So I'm more inclined to think if we do break this formation to look for the resumptive pattern. All things held constant, guys, Euro is not really the cleanest trade. Here's the weekly chart. I've been showing you guys this for weeks. Like, what the hell is this? Come on. If that break is legit, let's get a drive into the low week close of the year. Couldn't even get that. All right, fine. Well, if we're going to rebound, let's get a rebound towards resistance at least and see if we can reaffix a short position from there. Couldn't get that. So I've kind of been turned off to Euro for the last couple of days, I mean, here's what it looks like on the daily chart. Again, same slope we're looking at on the weekly. Well, come on. This looks like a break of support, check that's resistance, and move on. Getting divergence into the low. That's alarming. It's showing there might be downside exhaustion. And in the meantime, we have a monthly opening range that just ceases to break. So I'm still more neutral on Euro on the medium term. On the near term, I am looking for a possible weakness below 18 to validate the resumptive move towards 1730, big levels, and 617 into 1694. That's the 38.2 of the advance. That's the March low. That's the yearly low day close. Question: this is the low week close, by the way. That's on the weekly chart. This level here. I just added it on the daily chart, but we haven't even gotten that either. So Look for the break for guidance. Euro threatening a little bit more of a resumptive drop if we break 18 on the downside here, but I'm flat. Sterling still looking better. Okay, still like the sterling trade better. It's been a lot of back and forth, a lot of gyration. But what I want to show you again is when the technical clarity manifests itself on the weekly chart, everything, in my opinion, else falls in place. And this is all I'm looking at. Basic slope support. We're still there on the upslope. Within the confines of this year's formation, high, low, high, there's support at the median line. It just tells it that this coil here needs to break. Key resistance 139 into 140, same level we've been talking about since, I don't know, March. Key support and the breakdown level, that hasn't changed either. We need to break below 36.75 to validate the reversal. So still treacherous territory here, but we are at uptrend support. What does that mean? Well, here's the daily chart. So I've been showing you guys this, okay? Simple slope off the high, a parallel off that swing low from May, caught that low, looks like it's at the low here. Jamie drew a beautiful formation yesterday, and he tweeted this out to you guys as well. This pitchfork does seem very nice, very nice. So let me just get this darker. I'm not sure why that preset is messed up, but anyway, so it suggests that we're right at the 75% parallel right here. Again, key resistance. I wanted to highlight this 52-week moving average, 38.2 retracement of the drop. That gives you 39.30 right on the mark. That's your breakout zone if we are going to head higher in sterling. Key support hasn't changed, 137.34, 137.42. That's basically where we grounded out the entire monthly low, and it is the monthly opening range low. So again, tight ranges manifesting. Be patient. On sterling, here's what it looks like on the intraday chart. I've been working with this same pattern, guys, same formation. Nothing's changed with this off the highs. And again, resistance, breakout zone, key support. Look for a break of the weekly opening range here. It's Thursday, the range is preserved. We got UK employment data today. Is actually weaker than expected, 25,000 versus the expected 90,000. Previous year was 113,000. Really didn't get to see too much volatility. A little bit of a pop and play here, but it's the same range that we've been in all week. So we'll be looking for US to drive here. All right, so that is British pound, Aussie, and a little suite of Aussie setups here with Aussie and Aussie yen. So Aussie looks like this. We've been just sitting at support. So sterling, guys, no change to any of these levels, right? We're still in the same exact zone. We're looking for a break of the weekly opening range. Kiwi we covered. Here is Aussie. So into support was what we looked like as we were opening on Sunday. Here's the Sunday update from the 11th, and that level was 74.15. Here we are. This has done nothing this week. So we've just been hovering, still holding key support. And here's the 240 chart. This one's a little bit tight, so I got to zoom it out for you. But you can see it's been a real lackluster week. For Aussie, I do love where we are in the broader picture. This is critical support. 24.15 to 24.17. I'm sorry, 23.85 to 24.17. There's three things loaded up here. You got the low we closed from back here in, what is that, May of 2017. Perfect, clean pivot in price. The 236 of the advance off last year's low and a 100% extension from the decline off of this year's high. It's all loaded right here. If that wasn't enough, descending formation we've been following, the modified pitchfork puts the lower slope right there as well. We've been talking about this for weeks. So I'm not really in tune with trying to press a short into support. You know what I mean? I do love the Aussie short broader term, but we're at downtrend support. No longer interested in pressing intraday short positioning on Aussie. Now, again, all intents and purposes, this is a simple weekly opening range. Nothing fancy, nothing complicated. What if it breaks to the downside, Mike? Even if that happens, guys, there's not much room before you're coming at some pretty major levels still. 73.70, 73.78 is a 618. Again, the 100 is right here. We just bobbled against it last week. So if you're holding a short, more power to you. Okay, if you had the guts and you took it maybe earlier this week, that's fine. 74.15, 73.70s. Really look for an inflection, a reaction off one of these two levels. You need to break that. It should open up a massive downside play if it happens, but I do think that the immediate decline is looking a little vulnerable into this key support zone. So just use some caution here on the Aussie shorts if you're holding them. Okay, that is number 10, and 11 is Aussie yen. So no change to any of the Aussie levels from earlier in the week. The Aussie yen chart looks like this. So into the start of the week, it looked like it had already made a rebound right on Friday. We kind of talked about what that rebound entailed and how we liked the downside. It came right into the 618, overshot that, kind of failed and rebounded higher. Here's what it looks like since the start of the week. We did push higher, but we didn't get into that key resistance zone, right? The key resistance zone was 83 into 83.28. The high registered at 83.82, right? So 20 pips off, and here's the turn. We haven't really essentially broken the opening range lower yet. This is the daily chart. I know it's kind of messy here, guys. Here's what the weekly chart looks like, and here's the inflection zone that I'm looking at. If that 75% parallel, resistance, break, acceleration, support, that's where we closed last week. If this breaks, the risk's a bigger dump. On the weekly chart, you're looking for 81, basically 80.90, and 79.68 for just a basic 236. So it might be a decent move here. Add that to the fact that we're looking at basically what could be resistance in the SPX and turnover and risk. Might be a good candidate in the days ahead. Here's what it looks like on the intraday charts. Okay, so the levels are not like super messy, but it's just been kind of a hairy trade when it comes to momentum here. So I was looking for the exhaustive pump. We didn't really get a very clear-cut version. If you got a short there, there was some decent formations and triggers to put you in. But if you did get a short there, good on you. You're looking for 81.50. Next downside level is 80.70. But key resistance still is the 83 into 83.23. As long as we're holding below this level, I do think your risk sort of that deeper cut towards 81 and 81.70. Any questions on Aussie yen? There's been so many setups of clarity on tap, guys, but a lot of them lack momentum. So it might seem like, Mike, your reports are littered, man. You had a report with like 7 different updates on it. Yes, that's true, but we're not executing on all of them because, again, we're just kind of in this range stance right now. The levels are clear, but you got to wait for the proper triggers. So that's Aussie yen. Dollar Swiss, last but not least, don't really have much on this one either, but the levels, again, continue to pan out with precision. I just wanted to show you this because it was too clean, too freakishly clean not to. Here's what it'll look like into the start of the week. A little bit later in the week, kind of on the Monday webinar, we noted that actually ended up being the 100 or the 1618 extension off the high. So we opened the week there, support held. We saw a break of the median line, failure right ahead of the 75% parallel. Turned out to be just ahead of the 50% retracement. Here's the reversal, but guess what? A break of the weekly opening range just failed. So once again, it puts the onus on a break of the weekly range to get some clarity here. Resistance, now you just need to adjust to the new low. That puts resistance at the 50 and bullish inval at the 618. Downside levels, 90.90, 90.80. You guys remember that zone? Oh, we talked about that zone for months. Here's what it looks like on the weekly charts, right? 90.90, 90.80. Huge, huge zone. So that's my take on dollar Swiss. You did get divergence into that low, into downtrend support, so I wouldn't be surprised if we recover a little bit, but we're still within this formation, all things held constant. All right, guys, that's everything on my plate. Let me know if you guys have any questions or trade setups you want to review. A quick look at SPX. I didn't have this on the list, but I just did want to show you. Remember, from here, we're all slope. There's no lateral levels. There's no historic price action to look for. Everything's a record high. Every higher high is a record high. But what I wanted to highlight is the slopes that we've been following, just still continuing to hold. Resistance, 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 resistance. Divergence into the resistance. So price action with a higher high, the oscillator with lower high. That's a risk. That's a risk. Now, again, the fundamental backdrop makes it so that every time the markets start to put in this risk of a pullback, people start to say, don't fight the Fed. What are you talking about? You know, we have all this liquidity and the markets. That's true, but you're still going to get sentiment pullbacks. You're still going to get corrections and all the like. So here's what it looks like on the intraday. Again, even that near-term pitchfork, some modified pitchfork off the lows from May. This is the 138.2 extension of that pitchfork. Resistance, resistance, looks like a little bit of a pull resistance. If this is going to correct, and again, this is way too early, but I'm just sharing with you sort of the stance I'd be wanting to take. You'd be looking at something like that. Okay, and if we do something like that, even a move to the median line, putting together the anatomy of a trade, looks like something like this. 618, put the 786 there. Two levels of interest on the pullback. Okay, 43.30 and 43.12. If we break that 75% parallel, that's just like basics, right? Something like that. So we'll see how that pans out today. Okay. Well, if there are no other questions, guys, thank you as always. Aurelian, Gert, Jay, Steve, everyone here in the room. Stay nimble, okay? Watch that euro area inflation print tomorrow. More importantly, retail sales is what I'll be really drilling into to see whether, again, that inflation trade and all this talk about the reopening, is it materializing in real consumer demand? So we'll look at that tomorrow. Best of luck. Stay nimble into the weekend, guys. You too, Aurelian. Have a great weekend. Jay, thanks to you as well. I will see you guys on Monday for the free webinar on Daily FX. And then next week, I do have to reduce to a one webinar here. We are going to do that secondary webinar on Wednesday with IG. So I encourage you guys to see you there as well. And we will pick things up on Monday. Have a great weekend, guys. Cheers.